The winds of change. In order to tackle this issue, I'm pleased to interview Sacha El Khoury from BMO. Sacha, facing the inevitable change that is coming to our way of life due to growing populations, resource scarcity, diminishing biodiversity, and climate change, you have stated that we should not fear disruption, but find ways to fight it and/or to adapt to it. Could you please tell us how we should do this?
Yeah, absolutely. I mean, as you rightly say, Elsa, the world around us is in flux, and a lot of it is induced by major sustainability issues like aging population, resource scarcity, climate change, etc. And the next decade is going to be crucial in terms of tackling these issues, frankly, before it's too late, which means not only is the change coming, but we believe it will be accelerating going forward. Now, this will obviously disrupt the status quo, but at the same time, we think it will create massive opportunities for the companies proactively addressing these issues. And as investors, and I would argue as individuals as well, we cannot afford to sit idly by. We must embrace the change and we must embrace the opportunities that this change creates. And the good news is that there are a number of very good, high quality companies at the forefront of addressing sustainability challenges and providing impactful solutions to these problems, and thereby benefiting from very strong long term tailwinds.
What was the level of performance in 2020 for the fund you managed, BMO Sustainable Opportunity European Equity?
Yeah, the performance of the fund has been very strong since the rebranding in October 2019, which is when I took the lead. And in 2020, the fund outperformed the benchmark by over 10 percentage points, which we're very pleased with. But look, this is a team led approach and philosophy. And the fund has been managed by the team for over a decade. And I myself have been involved in its management since 2015. So looking at the longer term performance, that's very solid as well. And we believe this is a result of a disciplined approach to investing that is repeatable and scalable. Now, the fund in its current size is relatively small at 30 million euros, but we believe, again, is quite scalable. And dare I say, the management fees are enticingly low, and we believe offers prospective investors a very compelling proposition.
What are the main themes that the fund is exposed to?
So we've identified 6 broad sustainability themes to which the fund is exposed. This is a dynamic framework because it's representative of the world around us. So as the world changes, so do the themes. But they represent sustainability challenges that underpin our idea generation, and more importantly, significant areas of opportunity for the companies addressing them. And they are first, health and well-being; second, resource efficiency; third, sustainable cities; fourth, sustainable finance; and then we've taken technological innovation and we've broken it down into 2 themes: digital empowerment and connect and protect.
That's a broad field of topics. Can you maybe give some examples of companies the fund invests in?
Yeah, thanks, Elsa. They're definitely broad. So let's zero in on a couple of examples. So let's talk about a company that is a driving force when it comes to innovations and solutions that are linked to both the health and well-being and the resource efficiency themes. And that company is DSM, a Dutch vitamins and ingredients company. Now, this is a company that has been on a transformative journey. 10 years ago, the majority of activities were semi commoditized and beholden to supply demand swings in their vitamins business. But with a new CFO and a new leadership team, capital has been astutely reallocated to value add areas of the business. And this includes their research and development budget, which has been refocused on growth areas that are closely linked to mega sustainability trends. Now, you look at their pipeline today, and it's full of exciting opportunities that will fuel their growth for many years to come. The first one is called Clean Cow, and that will become apparent why in a moment. So, Agriculture and livestock in particular are coming under the spotlight. Why? Well, because cows emit more greenhouse gas than cars. They contribute a lot more to global warming because methane is a more potent greenhouse gas than CO2, and cows belch a lot of it. So DSM have used their existing network with farmers and their IP and know-how in animal gut health to come up with an enzyme that suppresses the production of methane right in the gut. Now, as climate change becomes a priority, and we're already starting to see that across various countries, we think this area will be coming under more scrutiny by regulators. And DSM are the first, and for now, they're really the only company coming to the market with such an impactful and material solution that will not only drive positive environmental impact, but it will also drive their own economics positively. Now, the second innovation in their pipeline has a direct impact on oceans, and it's called Veramaris. This is yet another example of their innovative R&D, where they have looked at some of the resource efficiency problems in the world, like the fact that overfishing is destroying our ocean's ecosystem, and that 20% of fish caught in the wild is used to feed farmed fish, to come up with an alternative to fish oil in fish feed. Again, using their IP in fermentation technologies and their existing network to come up with a sustainable alternative to one of really the most wasteful farming practices today. And the pipeline doesn't stop there. They have innovations relating to human health and well-being. One in particular, called Avancia, is a zero-calorie sweetener, which plays straight into the health and well-being theme. As food manufacturers come under more pressure by regulators to clean up their labels and consumers to provide more innovative products, they will increasingly need solutions like Avancia to push more nutritious products with less sugar content on the market. Now, the second example of the holding in the fund is inextricably linked to sustainable cities and the energy transition story. And that example is Schneider Electric. They are the global leader in energy transition and automation for various end markets like buildings. And they are at the heart of the energy transition to a more electric, digital, decarbonized, and decentralized energy environment. And they do that through their end-to-end solutions that combines both hardware and software. Now, over the past decade, Schneider has built a strong portfolio offering industrial software and digital solutions for energy management with a vision towards building a sustainable world. And that has aligned them perfectly with major long-term growth tailwinds as a result. Now, both DSM and Schneider have gone through a transformation that has seen them tilt to value-add areas of the market because of that focus on sustainability and by extension on growth areas. So we've held Schneider for over 9 years in the fund, and we've held it through that transition, and that has delivered considerable value for shareholders. But we're hoping of holding it for another 9+ years because we really think there's a lot more to come given the tailwinds they benefit from.
Sacha, when you select a disrupting company, how do you measure its digital ecological footprint?
Yeah, digitization is a huge driver of economic prosperity. And as I said, digital empowerment is one of the big themes for the fund. Now, software companies tend to have the least carbon intensive footprint given they are very asset light, but we're acutely aware of the ramifications of digital disruption, one being the explosion of data in the world, with most of the data that exists today actually being created in the last 2 years, which is huge. And here I'm talking specifically about the explosion of data centers, which in 2018 accounted for 1% of the global total electricity consumption. That's more than the national energy consumption of some countries. Now, that's a scary thought, but it needs to be taken into context. When you think about the global internet traffic that has grown 12 times since 2010, and data centers computing output has grown 6 times. But the 6% increase in data centers' energy consumption over that period doesn't look too bad. And that's because a lot is being done to improve on the energy efficiency of data centers. from the nature of electricity consumed, like renewables, to the technologies used to improve efficiency and the increasing use of hyperscaling, for example, which is a lot more efficient. There are also some really interesting creative ideas like setting up data centers in cold regions to help reduce energy usage. And in fact, Microsoft is set to be experimenting with data centers on seabeds, which is quite creative as a solution. So another way to look at this is also the impact that companies have through their products and services. And most of the companies that we hold in this space help improve their customers' ecological footprint by improving, for example, traceability in the case of Dassault Systèmes, but also Schneider Electric, again, they provide green solutions to the data center end market.
How is the ambitious target net zero by 2050 included in your portfolio?
A key pillar of our philosophy and approach is to monitor the conduct of our holdings, and we're proud to report that they're on the whole very ambitious when it comes to their net zero plans. At BMO, we've always been very ambitious when it comes to being a leading voice, which is why we're a founding signatory to the Net Zero Asset Managers Initiative, the ambition being to reach net zero emissions by 2050 or sooner across all assets under management. But coming back to our investee companies, we see again the net zero target as an area of opportunities. Again, to the example of Schneider, all buildings must be net zero carbon by 2050, but less than 1% are today. Similarly, electric vehicles penetration must reach 50% of the market by 2030 to reach the Paris Agreement goals, and we're still at single digit, depending on which countries you're talking about. And here we've invested in Alfen, which is a leader in providing EV charge points in Europe, and they'll again benefit from significant tailwinds here.
And Sacha, do you have any investment in Swiss equities?
Now, we're not invested in any of the Swiss heavyweights like Nestle, Roche, or Novartis. We're actually underweight Switzerland. But in absolute terms, Switzerland accounts for 9% of the portfolio.
And why?
Well, we're bottom-up stock pickers, so we do not build the portfolio from the top down. And anyway, Roche, Nestle, and Novartis, whilst domiciled in Switzerland, they had very little to do with Switzerland, right? They're very global businesses, and this is the case for a lot of European companies. They tend to be global. However, that 9% of the fund that we do have in Switzerland, there are some very strong and interesting names here. So Lonza is one of them. That plays straight into the health mega theme. It's a super high quality company and the largest manufacturer of biologic drugs. Biologic drugs, again, they're seeing the greatest growth in terms of new approval, but that's also where capacity is most constrained, which is why Lonza is so well placed. They've got really strong expertise and reputation and relationships with pharma companies. And that means they can take advantage of that growth. And that means that the growth is not only very well underpinned, the profitability is also very well underpinned going forward. And Partners Group is a second one that we hold, and one that your audience might be familiar with. They're one of the first private market investors to sign the UN Principles for Responsible Investment. But what's striking about Partners Group is the opportunity set in private markets and where they choose to invest. Basically, they invest in companies that are aligned to strong sustainability themes because they're targeting significant pockets of growth opportunities in, health and well-being, for example, infrastructure, energy transition. And if that sounds familiar, it's because that's the framework that we use, and that's similar to the one I described earlier. And they're really embracing the opportunity set, and because they invest in private markets, they have that much more of an impact on their investee companies, and of course, a great track record in delivering value.